let's come to a policy where we do know your view and where you have been quite unequivocal about it, which is the RBI Internal Working Group's proposal to allow bank ownership to rest with corporates. Now, this has provoked a kind of strident debate within India. There are people who have supported you and your reservations about connected lending and said that borrowers, and promoters can't be the same entities. There are others who say that the consumer of India already expresses greater faith in private banks. There are those in the RBI who have given the example of Kotak Mahindra or Yes Bank as examples of banks that have already existed in the template which you are now, in a sense, opposing. So what do you sort of pinpoint as your key concern in this particular proposal of the RBI to allow bank ownership to rest with business houses?
Well, let's be careful about those two names. Yes Bank is not.
Yes, I know. Yes Bank is a bad example, but Kotak Mahindra?
And Kotak Mahindra is a very good bank. Uday Kotak runs it well. But Uday Kotak is not an industrialist. He's largely a finance. The RBI has no problem with people in the financial sector opening up banks. In fact, as I've said, the RBI allows houses that have even up to 40% of their business in industry to own banks. That's a pretty large opening for any people who want to own banks. The concern about having majority industrial houses, then doing a little bit of financial business, is the financial business can then become subservient to the needs of the larger business house. And to some extent, this was the problem we got away from, when the bank nationalizations took place, something you can certainly debate whether it was a good thing or a bad thing. So one issue is connected lending. And, I've seen a lot of people saying, oh, but the committee said, yes, we will stop connected lending. If we could stop connected lending by legal means or by fiat, we wouldn't have an NPA problem today. If you could just say, oh, banks be careful, and they would be careful, there would be no problem. The reality is, for the low level of credit to GDP we have a huge NPA problem. And so to that extent, I don't really understand these suggestions that somehow we will legislate it away or regulate it away. You create the ban incentives, it creates the workaround that corporations do, and it will create even worse of a problem. This is why many countries ban it. We keep looking to the US, for suggestions. Well, the US doesn't have banking and commerce. Why don't we look into? They have pretty good regulators. Why is it that they fear that? That's something to think about. One. Second, concentration of power. You look at the directive principles of our Constitution. It basically is saying we do not want concentration of economic power. You look at what we've done in the banking sector for a long time, it has been an attempt to reduce concentration of economic power, including when you have successful promoters, we ask them to bring down their stake over time because we don't want all that power to reside in one individual. So the point is, out of the blue, we've sort of again said that doesn't matter. Why? I mean, that is a big issue in this country and probably getting worse over time as we have, more concentration and less competition.
Mm-hmm. But, there's a question on our live stream that says, do you believe we have enough banks in India? If not, do you not think it's necessary to allow business houses who can bring large capital to start new banks? And I get what you're saying about the concentration of power, economic power, the potential conflict of interest. But how do you address this point that both private and public sector banks in India are probably equally susceptible to political pressure, manipulation, and so on? What is the way ahead then? What is the way ahead? It's clearly not nationalization.
I think the way ahead is fix the political I think the way ahead is fix the political pressure. Don't add one more dimension, which is conflicted owners who would like to lend to their own enterprises, which are in difficulty. So the point really here is that it's not that we don't have enough banks. We have, when I last remember, around 90 scheduled commercial banks. It may have changed.
Yeah, I think it's 93 or something. But
we have a lot of banks. The point is the public sector banks have not been lending because their books are clogged with bad loans. And the private sector banks are now very wary of lending given the economic environment. And the private sector banks are not industrial houses owned banks. They are, ICICI has a widespread board. Axis Bank has a publicly held board. Kotak has a central entrepreneur, but has again many investors in Kotak. So the point is that there is a successful model. This kind of private bank, yes, there have been some shenanigans that have been revealed in the recent past, but they are nowhere near in terms of bad loans compared to the public sector banks. So if you want to open more banks, open it up to more of these entities. There are some finance business houses concentrated in finance who could potentially get a bank license. But the need of the hour is not necessarily more banks. It is cleaning up the problems in the current system and trying to give the public sector banks greater leeway to lend, but in a better way. They have been lending in a way that is calculated to create bad loans, not just in past governments, but look at the Mudra loans that were entirely created in this government. And you can see that the real problem, and compare small and medium enterprise loans by the public sector banks with small and medium enterprise loans by the private banks. And there's a huge difference in terms of their performance. And so the point really is, you keep saying, oh, this is bad governance. Don't create an additional governance problem to deal with a past governance problem. Fix that past governance problem. You're not going to find a magic bullet. We know what the problems are. If you're not willing to fix them, don't create a new problem.
But, isn't the difference between the US, where you're quite correct, the pushback against Amazon, Google, Facebook right now is quite fascinating to watch. But the difference between India and the US is that there you do not need as much government to do business as you need in India. And therefore, the people you name, Naushad, Rajiv, these are people who are also displaying a measure of spine, and they're taking risks with pushback, political pushback, when they take the positions that they do. Everybody is not willing to take that position. There's also a fear that regulatory watchdogs have not worked as they should. If you look at the telecom sector, for example, you now have just a handful of players. You're seeing consolidations, you're seeing mergers. Now, one way of looking at it is that's Darwinian, it's the nature of the market. The other way of looking at it is that monopolies aren't being contained, that the Competition Commission isn't quite doing its job.
I think the Telecom Authority has been singularly deficient on ensuring competition in the telecom sector. I mean, that's why we end up with three players, one of whom is already very weak. So what did they do wrong? I mean, certainly we need to analyze what went wrong, why a certain kind of lack of competition with all our, some of the foreign competitors withdrawing. I mean, we need to learn from that and make sure it doesn't happen, instead of trying to move the same kind of structure to other industries. That would be problematic down the line. So one, study the telecom experience. Maybe all this was not ordained, and it just was a set of mistakes. But understand what went wrong. Did the Telecom Authority, was it too lax to certain practices? Did it favor certain entities too much on certain occasions? That's something to think about. And second, are we in danger of doing that now, for example, in the banking sector? Should we be careful? That's what I think we need to keep thinking.